Okay, so we've talked about the cracks in the housing market, the gates locking in private credit, and the pending banking crisis. Now let's talk about us. What can we do to protect ourselves and our families when the system starts falling apart? In 2026, the biggest risk isn't your portfolio losing ground. It's about being able to access your funds and your cash when you need it. And if you have all your savings tied up in shadow banks or in real estate, let's face it, we're vulnerable. Experts recommend that we keep probably around 3 months worth of cash on hand in the event of an emergency. An emergency may be something like our regional bank closing its doors for a few days or a few weeks. If that happens, there's no way that you're going to be able to get your money out. So you want some cash on hand that you'll be able to pay without stressing over it, your rent, your mortgage, your groceries, your medications, and your utility bills. Next, if you haven't already, it may be time for you to start looking into investing in some hard assets. Gold and silver are the classical choices, as they've been the most likely to gain value during a recession or an economic crisis. If you're a homeowner and you have a mortgage that's around the 3 to 4% range, don't touch it. This low rate is actually one of the biggest assets that you have right now. And if you need to buy a house soon, keep your debt to income ratio below 36% and your credit score above 740 so that you qualify for the best possible interest rates. The bottom line is that 2026 isn't about getting filthy rich. It's about not being forced to sell any of your assets if and when the banks start locking their doors. Thanks so much for watching until the very end. I really appreciate your time. If you found this video helped you gain some clarity of mind, go ahead and hit that follow button. I know it takes an extra second, and I too sometimes hesitate to do it, but engaging in content like this is a little like stacking coins. The more you do it, the more fun it becomes.